Good morning, everyone, and thank you so much for joining us for another exciting CFAL Coffee Break webinar. I'm Paige McCartney. I'm the marketing coordinator here at CFAL, and I'm thrilled that you've decided to spend your morning with us to dig deep into what we consider a very important and timely discussion. So today we will be exploring how your personal investment decisions not only help you to achieve your financial goals, but also contribute to the broader national economic development. Our expert panelists will share valuable insights on key investment sectors, the impact of government policies on investing in the Bahamas, and practical strategies that you can take implement in your own life to ensure that your investments are both profitable and purposeful. So whether you're new to investing or you're looking to refine your investment strategies, we're hoping this session provides you with all the tools and inspiration that you need to make a positive impact through your investments. So now I'm thrilled to introduce our panelists. Our first panelist needs no introduction. He is the visionary behind the CFAL brand and is probably one of the most influential factors in the investment landscape in the Bahamas. He has more than 30 years of experience in the investment arena and has many, many, many accolades and for being with us here today. I know you're a very, very busy man, so I appreciate you scheduling us in.
Well, thank you for having me.
Angelo Butler has more than a decade of experience in finance in the financial sector in the Bahamas. He is a CFA charter holder, and he currently works as the manager of corporate advisory services here at CFAL, overseeing research and corporate finance. And he's kind of like our in-house encyclopedia for all things investment related. So thank you, Angelo, for being here today.
Thank you as well.
Before we get started into the discussion, I want to let you know that we will have this webinar available before the end of the day on our YouTube channel, and we will also be sharing snippets about it throughout the rest of the week for those that may miss this session. Also, you can ask questions in the chat box throughout the webinar, and as they come in, we'll try to answer all of them for you. So we're going to ease into today's topic by first hearing from each of you about what inspired you to actually start investing in the first place? Let's start with you, Anthony.
Well, my start in the investment world really began back in Crooked Island, watching my grandfather invest in real estate and other things. And one of the requirements at the time was for us to read the newspaper that came from Nassau, and he would always bring business magazines, and so I just got a kind of curious interest. Then move on to the now University of Bahamas, off to school, and my first job in investment was with, at the time, Coots & Co. And just seeing the investors, clients that we manage, and see how their funds kept growing. I decided, way back when to try investing, and my first investment was about $500. And, the rest is history. I think when one think about investing, the challenge is most people think you need a lot of money. And we're not here to promote CFAL products because we really want to educate the population, but this is one of the reasons why we made a decision many years back to allow persons who wish to save and invest for their retirement that they could invest simply as much as $25 a month, $50 a month, because we believe that the journey of investing starts with that first contribution, but more importantly, the consistency with which one has to continue to contribute. And so I think we want to dispel the notion that you need a lot of funds to begin investing. I think a journey of 1,000 miles begin with the first step, and we think it's important that you at least start to invest, no matter how small it is. And given the socioeconomic challenges we have, given the budgetary constraints the government has, given the national insurance, let's be real, almost
Yeah.
I wouldn't want to use the word bankruptcy because at the end of the day, the government could always charge taxes as they recently, and they could increase the contribution. But the reality is, unless something significant is done to national insurance, a lot of us, particularly the young people like Angelo, should not be counting on taking anything from national insurance. So we believe that it is important that you save for yourself, because a lot of companies in the Bahamas don't have pension plans. So that means a lot of persons are not having opportunities. As a matter of fact, just this past week, I was speaking to a lady. She does custodial work, and we were just talking, you know, and I said, so do you have a pension plan? And she says, no. And she said, December will make 25 years since she's been at this one company, and she does not have a pension plan. Or so that means she will retire soon, and the only thing she will have is her dependence on national insurance. And we know, the amount that she would probably get will not be sufficient for her to have an enjoyable lifestyle.
Yeah.
And I will stop at that.
No, that's a really key and very timely point that you made, and we can get back to that a little bit when we talk about how investing helps to build the nation's wealth and with national development. But let's hear from you, Angelo, your perspective on investing and how you got started into it.
Yeah, sorry. When I was very young, I would say my mom kind of really got me into saving and understanding the benefits of saving. I would, after school and on weekends, when my mom worked a part-time job, I would go there. And ironically, I was very, not ashamed of it, but she worked at a home goods store, and sorry, I would pack bags at the store, right? And so in the evenings, on weekends, some days you would make $5. On a Saturday, on a good day, you could make $40, $50. And I remember my mom taking me to the bank and opening a bank account. And every time I made money packing bags at the store, I would give it to my mom, and she would take it to the bank and deposit it for me. And back then, that's when you had the little books where the bank would put it in the machine, and it would update, right? And that kind of taught me the concept of interest. And when you put money somewhere, you can earn something from it. I did that for many, many years. Just watching it, and every month, I couldn't wait to see how much interest it earned. And back then, it was probably little to nothing, right? $15, $20 in interest here and there. But nonetheless, it taught me the concept of saving, and I always kind of stuck with that. And, back then, you kind of got some interest from banks. It was still low, but it was something compared to today. And then, when I was about 18, I got a temporary job at Central Bank, and I, happened to work in the department where they issued government bonds. And I saw people coming in all the time, bringing checks and deposits. I need to buy government bonds. And, I kind of asked, what was this? And, I learned about it. So from there, I started. I think you had to purchase a minimum of $1,000. And so that would have been my first real investment there.
So you hear stories from the both of you. People are out there investing, but it's not widespread, and it's not as widespread as it should be and could be. Where do you think that the disconnect is in terms of average Bahamians understanding how to start investing, when to start investing? And I know this is something that we're trying to do at CFAL, really educate people about saving and investing. Where do you think the disconnect is, and how do we bridge that gap?
Yeah, I think one of the issues is, and as Mr. Ferguson mentioned, a lot of people think you need a lot to start, right? So people don't think, oh, I have an extra $25 here, I have an extra $50 here, let me start with that and put that there. So a lot of people say, when I really make it, then I'll start saving, or I'll start investing. And I think, you have to start wherever you can, as early as you can. And, it becomes a habit, right? Because like I said, for me, starting so young, it's always been ingrained in me, right? No matter how much I make, what I have to spend on, I will find a way to save, right? Or find a way to cut costs and what's not. So I think it's just understanding that, or getting the message out there that you just have to start with something. It doesn't need to be big. If you have some money today, start today, not wait until some magic number happens where, you feel you should start.
Okay, before we move on from this, what is the key investment principle that you live by? What is the thing that when you decide, I'm going to invest in something, or I'm going to take this amount that I've saved and put it toward this investment? What's the key investment strategy you live by?
Well, that's an interesting question because it has, in the investing world, have so many facets of investment styles, etc. And so for someone who is just starting out, I think some of the principles that they should follow are: one is the safety of the investment. Also, understand what you're investing in, and then being consistent. So for instance, in recent years, this thing called crypto,
Yeah.
a lot of persons, have open online accounts, say they're going to be trading crypto, and have not the first clue what the risks involved in trading in the first instance, much less trading an instrument that has no real notional value in terms of contribution, right? And so it's important to understand what you're investing. It's important to understand where you are in the investment cycle. And so for beginners, I always say you should probably look to invest in some form of conservative mutual fund that's professionally managed, and learn the process before you decide to venture out on your own. So I think that's key to what you're looking to do.
Like, one of the things I've learned since being here is if you're going to miss that $1,000 or that $5,000, don't invest it. Is that correct? Like, if you need that to live off of, should you go and invest that?
Well, you always want to have, I guess, some sort of liquidity, right? Some sort of emergency funds, right? But at the same time, you can find products that are safe, right? Every investment is not risky. So you may say, I may need this money in a year. So you put it in something that has a very low probability of losing money. And again, it's understanding where you are and what type of risk you want to take. So if you need the money in a year, you could buy a conservative bond, or some sort of fixed income investment, maybe a treasury bill. I don't want to get into explaining what a treasury bill is, but all of these are short-term liquid instruments that you can access if you need the capital as well. So again, you don't have to not invest because my horizon is short, or my horizon is only 6 months. You just you can speak with someone at a financial institution who can guide you and tell you, okay, this what works for you at this time.
Well, I mean, to add to that though, when one is looking to invest, right, I think you should categorize the different type of buckets that you want to be in. So for instance, if someone is looking to save up for a deposit, a down payment on a house, which is going to be the largest investment for most persons, right? As Angela said, you may put that in a conservative, less bond fund, fixed income. But if you're a young person and you will be retiring in 30, 40, 50 years, then you should consider some exposure to equities. But again, understand what you're investing in and speak to an investment professional, and make sure that you understand. I think the principal thing is understanding what you're investing in, understanding what the risks are, and over time, even though the market, like in 08, 09, most recently during the COVID, the markets were down 40, 50%, but today they have fully recovered, right? So someone who is near retirement within the next 2 to 3 years, then you should not be exposing yourself. But a young person like yourself, or someone who's starting out, just finished university, then they can take that risk.
Yeah. So now we're going to shift, and we're going to try to draw the connection between personal investing and national and economic development. You mentioned, Angelo, that you don't want to explain what a T-bill is, but that's an important part of how our country works, how our economy thrives, right? It's average Bahamians and companies and corporations helping the government out with its financing, correct?
Yeah, so I guess national development can be separated into both public and private sector, right? And a lot of people think that, okay, investments are only for rich people, or only the super wealthy persons provide or have opportunities. But one of the largest investors all around the world are pension funds, right, and mutual funds. And if you look at the underlying investors in pension funds and mutual funds, it's the average individual. So when you as an average individual invest in a mutual fund, and that mutual fund funds an airport, in essence, you've contributed to national development. And like Paige mentioned, with the Treasury bills are means for the government to provide itself with short-term funding, right? And so every month, if you follow the newspaper or follow central bank's website, you would see where the government is issuing Treasury bills, right? Some of it is to replace existing Treasury bills, and some of it is to raise additional capital. So, the government does capital works. It builds roads. It, in some cases, constructs airports. Provides things that help with development, and average individuals via mutual funds, pension funds, purchasing Treasury bills, purchasing government securities, in essence, are funding that, right? Because the government itself does not necessarily have money, right? The government gets its money from taxes as well as borrowing from the citizens. So every pensioner and every subscriber to a mutual fund, which are in the tens of thousands or even hundreds of thousands in the Bahamas, are in some way contributing to that development by providing funding, because without money you can't develop.
And this goes beyond politics, right? So there's no need to put politics into investing in government bonds and T-bills, correct?
Correct. No matter who is in power,
Yeah.
when your interest is owed to you, generally speaking, or for the most part, you get what you want, what you're due, no matter who is in power. So it's bipartisan.
So we've been hearing a lot about a possible economic downturn in the coming years. How do you balance investing, especially in the markets that seem to be kind of volatile? How do you balance investing when things look to be going down?
Well, first of all, let's be clear. For you to invest in a volatile market like the international markets, you're required to get central bank permission. Mm-hmm. So it's, you have to understand what you're getting first in the protocol. But in the local market, just so you know, there are what you call business cycles. Mm-hmm. Some up years, some down years. The Bible speaks about the 7 lean, 7, so plentiful. So, we just have to be mindful, again, depending where you are as an individual, in your own life cycle is how you would go about investing, and in some instances not really worrying too much about those downturns. And so even professionals get it wrong in trying to anticipate, when is a recession and what are the implications for the stock market, etc. But just to go back to, the national development. So savings, in its simplest form, is the opportunity to provide capital formation, which results in job creation, as Angela talked about the investments. It boosts consumer spending, and all of these things is what creates the overall economy, right? It facilitates investments in things like AI and all of the technological enhancements, strengthening the capital formation. So, for instance, in recent times, a lot of the government quasi-agencies were having challenges raising money because people don't believe either in the government's ability to make it work or be successful at it. However, when a private sector group takes it over, they can raise the money and put the necessary protocols in place to create the necessary structure such that the companies can thrive, hire more people, invest in other opportunities. And so, again, it's important that we understand that each dollar we save contributes to the overall national development. The challenge in the Bahamas is the average bank account is less than $1,000. So a lot of people cannot even participate when opportunities present themselves. We did have an opportunity where the government at the time allowed companies, individuals, particularly in the civil servants, to invest in our port development, which has done extremely well for them, right? And so we believe it's important that one, look at where they are, but at the same time, you have to make some sacrifices. I think the younger people today, and Angelo, no knock on you, but you learned early on to save, but the younger people today, they the instant generation. They want instant gratification, right? And so they are not prepared to sacrifice long-term gains, or short-term, gains for long-term benefits. And I think we're at a stage where the government cannot do it. We've become a government-dependent society. And this is in part because the politicians encourage that nonsense. And one has to look out for themselves. And again, please, while national insurance is a good safety net, in my opinion, the safety net is not sufficient to cover the Bahamians and the persons who are depending on it for the long term.
So what I'm hearing is a part of national development means Bahamians taking agency of their own future, their own finances, so that that extra burden from the government isn't taken on. Is that what you're saying?
Well, not that the extra burden it is providing your own independence, right? Everything is pretty much, very expensive living in the Bahamas, and sometimes you wonder how people do it. But I think a combination of taking on your own personal responsibility is extremely important in the overall development of the National Development Plan.
When you talked a little bit about partnerships and how that helps the nation, because the government obviously doesn't have enough financing to take on a lot of the infrastructure works that we need. How important is it for the private sector to come and partner with the government so that we can see that level of growth, economic growth that we need? Because if we're waiting and waiting for the government to raise the money on its own, we're not going to have the progress at the speed that we need, right?
Yeah, I think the private sector is always there and always available or willing to do it, right? It's finding the balance, I think. Some things, and we all have different ideologies. Some persons believe that government should own everything. And then there's the, wide end of the other spectrum that says government should own nothing. But, I think it's a balance. In some areas, I guess there's benefit to government owning certain things. But in a lot of cases, if the government is inefficiently managing it, at the end of the day, it's not benefiting anyone, right? So if we look at, for example, PPL, PPL is expensive, right? And we don't necessarily pay the true cost of it on our bills. However, the government has to subsidize it every month or every year with additional funds that comes from taxes as well. So while you look at it and say, oh, government should always own PPL or the electricity, are we really benefiting from it? And so it's finding that balance where it's maybe a partnership, government can be involved but not control it, let it be more efficiently managed so you can actually pass on savings. And as well, it would take some of the burden off the government. However, you have to regulate it as well to make sure it's not exploitative, right? If that's a word. Not exploiting the Bahamian people, so now when you have things with private sector, of course, investors want a return, right? If someone is investing their funds, they expect to earn something on it. So it has to have some sort of profit, but you want to make sure it's at a manageable level where it's, all parties, when you get an efficient service at an affordable price, while, investors, as well as the government, get some sort of return on what they would have invested into it as well.
But looking at where we are as a nation, the landscape of investments, what are some key sectors you believe are kind of ripe for partnerships with government and private investments?
Well, if we look at what's going on now, the new energy reform announced sometime in June is just that, a partnership with the private sector to ensure that we have new stability, we have new generation, new cleaner fuel, and at the same time, once everything is implemented, reduce electricity bills, right? So that's one sector. The other sector where we have major challenges, in my opinion, is in the healthcare sector. A lot of persons die today because they can't afford health insurance and they can't afford to buy the drugs. And so it's unfortunate in 2024 that people die because they have no access to the drugs and stuff that they need. And so I think investment in healthcare is important. Back to the other comment, though. I think government policies can drive a lot of economic development, whether that is providing incentives, whether that's providing the regulatory environment for ease of doing business. I think those things are extremely important if this country is to move forward. So, if one just take a look at APD, there were restrictions on how much money you could make, and if you make more than whatever, the threshold, you have to then reduce the tariff for the next time, right? The next seasons, if you will. So there are ways that government could be involved, but not be in a position where they using quasi-agencies as political job fairs for their constituents. I mean, it's just a reality, right? Let's take ZNS, for example. If you recall, when the airways were open, everyone was complaining that all of these people at ZNS were going to lose their jobs, et cetera, et cetera. Since then, we've got 20 plus radio stations, we have alternative television stations, et cetera, and they're all hiring people. So the industry expanded, it didn't contract. And so I just think that too many persons like to opine on things without really understanding the implications, whether it's financial, regulatory, or the impact on humans and the lives of Bahamians, Let's take, for instance, banking in the Family Islands. I'm from the Family Islands, right? It's impossible, right? And the fees are basically, borders on criminal, right? But, this is where I believe with the right partnership that government can help provide a livable standard for the citizenry of the Bahamas.
How do we bridge that gap from where we are today to a Bahamas where we have more private sector involvement in improving the infrastructure that we have in place, improving the conditions on the Family Islands in terms of being able to bank? How do we bridge that gap? How do we get from where we are today to where we want to be?
I mean, very simple. The political directorate needs to just make some tough decisions. As I've said time and time again, some of the policies that needs to be implemented will cause short-term pain, and you may not get reelected, but when history is written, I think you would be supported and say that those were great decisions that were made in the best long-term interests of the Bahamas.
So we have a few questions already coming in, and these are investment questions. So we have you two great minds here. Folks want some private, personal investment support. So for someone who's close to retirement from a job of 25 years of service, but started late saving for retirement, what's the best option for them in terms of growing what they have right now?
Well, the earlier you start, generally speaking, the less you need to put, because your money has more time to kind of grow, and the effects of compounding are higher. We always tell persons, some people say, I start too late, and it's like, no, whenever you start is the right time, right? Or the best time, because you can't go back and change it. So, that person, they may need to save a bit more to reach a certain target, given that they're starting a bit later. And, we have tools on our website, as well as you can always give us a call if you want to kind of sit down with someone and talk about it. But if you say, okay, this is my target, right? Or you can tell us how much you want to receive every month in retirement, and we can tell you what number you would need at retirement, earning a certain rate, to live that out, right? And from there, we can then tell you how much you need to save per month from now till then. So that person may need to just save a bit more than they would have otherwise had to at the start. But, the idea that it's too late is something we always discourage people from thinking.
Okay, so you talked earlier about equity investing. Someone wants to know, what are some of the types of high interest saving or investment plans a person can participate in? I know we have a number of products here at CFAL, but how do you get involved in high interest or riskier type investing that's out there in the U.S. here at home in a safe way?
Well, first of all, high risk, what does one mean by high risk, right? So usually one would say that investing in derivatives, options, equities, or stocks, bonds, those high risk, going down to lower risk or money market or treasury bill, as Angelo mentioned, would be the least risk asset. But in recent times, some of the transactions that we were involved in, the rates have been anywhere from 6.5% to 8% per annum. Now, the rule of compounding, you double your money if you can get, in 7 years, if you can get 7%, right? So the recent transaction that we did was paying 8%, right? In our opinion, the risk, is low risk investments.
Okay.
And so, as a rule of thumb here, whenever we structure an investment, we are required to understand what the investment is, run the variables, but we want a premium or an additive of what government bonds is. So if government bonds is paying 5% and a private company is issuing debt, we would expect a premium or 1% or 2% above whatever the government debt is to compensate it for the risk that we're taking, right? Now, I've said all of that to say, risk is a function of the financial position of the company, a function of where you are in life. Because if you're 20,
Yeah.
that equity investment is not as much risk as if you are 60. Now, having said that, this is where I say you have to understand what you're buying. Because you could buy a company at 20 that the financials are very weak, poor management, and it goes out of business. And so it's important that, again, you understand the investment as it relates to that particular company that you're investing in, making sure that the cash flows and the management are there to ensure the growth of that company, and which would mitigate your risk. But again, it's a function of where you are in that life cycle in terms of whether you're just starting out at 20 or whether you're at 60 and you're going to retiring in 5 years.
Yeah, and that's why, Angelo, you always talk about longevity of investments. You can't expect to get something, to turn around something in a year or 2 years that quickly, right, if you want to really see your money grow.
Yeah, I always say slow and steady over the long term is how a lot of people really build their wealth, right? And, every couple months almost now, you have some sort of get-rich scheme or scam that comes up, right? And what really traps a lot of people is, it's easy to take $10 and double it and make 20.
Yeah.
And it's easy to take 20 and double it to 40. But as you get into, say, 1,000, it's hard to turn $1,000 into $2,000 in a month, right? So we always tell persons on average, if you look at the U.S. stock market, which is probably the greatest stock market in the world, or the greatest creator of wealth there is, it does on average 8 to 10% per year, right? And so, if you're getting more than that, someone's promising you more than 8 to 10%, you really need to ask them how, right? Is it sustainable? It could last for 2 years and then it could go belly up. But you want something that, 5, 10, 15, 20 years at 7, 8%, you'll be surprised like what that really does, right? And, there are mutual funds as well for individuals to actually invest in those as well and earn those rates of return from in the Bahamas as well. So, again, you should kind of think on average 8 to 10% is what the U.S. stock market gives you. If someone is promising you more than that, you really need to ask them how and really think to yourself, is this sustainable? Because you don't want it to look like it goes from 100 to 200 in 2 years and then 6 months later that 200 now becomes nothing. So, be careful for quick short-term get-rich schemes because on average 90% of them don't really last.
If it's too good to be true,
It probably is.
it probably is. I'll give you an example. So, a young person finished university at 20, fortunate to get a job. They save $100 a week until the age of 30. That's $100 a month. Assuming all things being equal, they get 6%. They stop. They don't save anything else, but they don't withdraw it. at the age of 65, they will have slightly more money than someone who starts at 30 and invests for 35 years $100 a month at the same rate.
Okay.
Again, the power of compounding. So that same 20-year-old who invests at $100 a month for the entire 45 years will have more than double what the investment result is for the person who
Started at a
later date,
Wow.
right? So it's important that you understand, and Angela said slow and steady, and that's it.
So I need you guys to play psychologist for a little bit, because we have a question, and there's a huge psychological component of investing, I think, for a lot of people. This question asks, after losing some funds in saving and investments, what advice do you give someone to proceed? Like, how do you get back onto it after you invested in something, you lost everything? How do you get back on there?
But I think we should then start with the very basic of investments, diversification. So I, would say in the first instance, next time, don't put all your entire investments in one instrument. And this is the reason why we encourage new investors to utilize the mutual fund route, because you are investing in a basket of securities that the probability that all of them will go bust is very remote. And so it's important then that you invest in a diversified stream until you have the ability to have sufficient funds to properly diversify your portfolio. But again, look, just as there are cycles in the economy, there are cycles in the investment world, and so usually these investments come back. Not all the time, but usually.
You have to have the stamina to maintain your investments over the long term. You were going to add to that, Angela?
Yeah, so there's an interesting concept in finance called behavioral finance, right, which speaks to this. And what you will find is that all of us have investing biases, right, or things from different experiences. Like you said, this person lost money, so now they're a bit timid. And, when you usually do a risk questionnaire, it asks you some of these things to try and figure out what type of investor you are. So persons have to understand what they are. The minute you talk to anyone, especially young persons, they always say, man, I like take risks. But if you ask them, okay, if you put $1,000 here and tomorrow you wake up and it's $500, how will you feel, right? Can your stomach take it? Will it change your life, right?
Yeah.
Will you need to save more money, or, kind of how does it affect you? And that can really guide you to knowing what you are, because if you can lose $1,000 and wake up tomorrow and be fine, then clearly you have a higher risk tolerance, right? And you can afford to take more risky investments. So you have to really understand yourself, and two, you have to kind of write down decisions. If you make an investment, write down the logic or rationale for why you did it. And so if it goes bust, then you can look back and say, okay, at least I made this on some sort of sound decision. Because if you just make the investment, don't think about it, don't try to remember why you even made it, and it goes bust, all you will do is regret and question yourself every time something else comes up. And sometimes you find, okay, maybe I didn't do enough research.
Yeah.
And if I had asked someone, they would have told me, okay, look out for this, and that would have saved me from getting into a scam or some sort of bad investment.
And I'll just point here, CFAL, we have a whole team of experts that can guide you through all of this. That you just give us a call and they will give you free financial advice, right? You wanted to add something?
I'll just say this, right? The greatest behavioral, all of us exhibit it, is fear and greed.
Yeah.
When the world is going well, we become very greedy and we take risks that we can't understand. And when things are going bad, everyone wants to sell. And, if you just borrow a phrase from Warren Buffett, when everybody is selling, or from Templeton, this is when you want to be buying.
Yeah.
When there's so much fear in the water that you want to be picking up investments. Then again, so for instance, the recent in the U.S. AI craze, everybody wanted to be in there. But I just have to remind people, if you look at the .com era, 90% of the companies that were high flyers no longer exist today, right? Yeah. If you look at Intel, it was way high flyer, and then you look at NVIDIA, it's not sustainable, right? A company cannot grow more than the economy is growing for an indefinite period of time,
Yeah.
right? And so, again, I just say, back to the behavioral science, just, temper the greed, the world was not built in, Rome wasn't built in a day, and I think it's important that you be very methodical and very consistent in how you save on a daily, weekly, monthly basis.
We have another question. Someone asks, if you already have a pension plan with your company, would you advise getting another portfolio, a separate investment portfolio, or putting funds into your pension plan with your company, putting more money, I guess, into the plan?
I guess in that sense, it depends. You kind of want to look at as well, what's your pension plan earning, right? Because let's say your pension plan at work is earning 2%, and you could earn 4% investing in a mutual fund on your own. And, I think that answers the question. You would want to invest in in a mutual fund on your own. And you also want to consider, restrictions, right? You may not have access to the pension. So if you keep putting more money into that,
Right.
you always want to have some sort of liquidity or access to funds in the event things happen, because life has shown us that things always happen. But the answer is yes, you should always, if you have additional funds that you can save, no matter where you save it, it's always the right answer to say yes. So
Yes, save extra
where you
money.
I mean, when we first started many years ago, right? One of the things we espoused at the time was a three-legged stool. Your pension fund, if you're lucky, reminding that only about 35% of companies in the Bahamas have a pension plan. Your personal investment portfolio, if you, again, have one, and some savings for daily consumption. And I think that mantra still has its merit today. As Angela said, there's restrictions on pension investing, etc. And so you want to have the flexibility without having the restraints of the pension rules. And this is why we believe, and we've been calling for this for 20 plus years, the government urgently needs to require mandatory pension savings in this country. It has implications for individual lifestyles in retirement. It has implications for the overall growth and development of this country, and it has implications for the dependency on the National Insurance Fund. So it's important, again, that pension fund savings, whatever, needs to be addressed as a matter of urgency if we are to face some of the challenges that are ahead of us.
Why do you think companies are so reluctant to set up pension plans for their employees?
It's additional cost.
The extra cost.
Yeah, it's additional cost.
But the long-term benefit, like you mentioned, not just for the employee, but for the nation, it's just profound.
Yes.
Okay, so we have another question. Please recommend a business that I can invest in today besides CFAL. Well, hey, this is the CFAL Coffee Break webinar series, so why don't you visit our website and you can take a look at all of our wonderful products. We'd be happy to help you through applying for one of our products. At the age of 55 and you have no retirement plan, which plan do you recommend starting with? Which one of our products do you recommend starting with?
Yeah, I think something like the CFAL bond fund, and again, it's best to sit down on an individual basis to get a full-on answer, right? But I can comfortably say the bond fund because it's very conservative. I think since its inception, it's never had a negative year. And so, it's kind of, again, that slow and steady growth, right? You don't have to go to sleep and wonder if you wake up tomorrow if your money's going to be there, right? Now, of course, it doesn't grow as fast as if you were to invest in one of the equity funds or one of the international funds. But again, at 55, you don't want to be up at night thinking too much about your investments. You want something that's slow and steady, that when you need the funds in retirement, the funds will actually be there.
Okay, this question is for men. Should an investment strategy be different for single men versus married men? You're both married. What's the difference in how you would approach investing as a single person versus being married?
I'll just say this up front. Investments is like healthcare. It's very individual.
Okay.
Right? And one size never fits all,
Yeah.
right? And so, having said that, it also depends on your family structure, how many people are depending on you, et cetera, et cetera. But I don't know if there's a different strategy, right? Because perhaps that single person will get married sometime in the future and that they'll be in a better position to take care of their family, right? So I don't think there's a strategy for a married person vis-a-vis a non-married person. I would say the married person has more responsibility, particularly if they have kids, school fees, et cetera, to probably have to save a little bit more than the single person.
Yeah, I guess I would say, when you're single, save as much as you can.
Yeah.
The
Wives
older
are
you get,
expensive.
if you get married and have kids, naturally your expenses will increase over time. But again, it's, no one size fit all. You have to kind of analyze your own situation and see what works for you.
Okay, so someone's asking, with the emergence of newer or modern investment media in the Bahamas, for example, Arawak X, Prosper, due to growth in technology, would you recommend exploring these options in addition to the ones that already exist, the investment houses like CFAL and some of the others that are already established?
Arawak what?
Arawak X.
Are they still around?
I think they are in some legal situation right now. There are matters before the
And
courts.
then you say what?
And there's another one called Prosper.
Right. Look, when investing your hard-earned money, please ask professionals to give you the straight up on companies looking to be innovative and provide investment services. Try to understand the support behind the company. Try to understand what they are trying to get you to do, right? Our crowdfunding was a great idea, but the checks and balances, from what I read, was not there, right? Prosper, I understand, is an online trading platform, right? But first of all, make sure that you get the necessary central bank approval before you can invest in those things. 2, if you're not ever invested in your life before, that's not the platform for you.
Yeah.
You really need to understand, as I indicated earlier, what you're investing in, right? So, okay, everyone is talking about NVIDIA for the last couple of months, or Apple, or Microsoft. So I'm just going to go and invest. Why am I investing in those things? Are you using fundamental analysis? Are you using technical analysis, price charts, particularly on trading platforms? That's what people usually use, right? So again, it's important that before you invest your hard-earned money in new startup, just ask the traditional firms. And this is, we love competition, so we're never afraid of competition, right? You bring on the rules, you make the rules, we'll figure out the best game plan to beat you, right? And so it's important to us. Well, I'll just step back. When we first started back in 1997 in March, the ethos of this company was research, and research. We wanted to be able to research the investments that we're putting our clients' money in. We wanted to research that when our clients require their funding or their money back, they can get it. And we also wanted to make sure that not only they have a return on principal, but a return off principal. And so it's important to understand that. While these things are pretty decent, just understand what you're getting into.
Yeah.
Yeah, I think for me it's, that there's this thing called fear of missing out, right?
Yeah.
Where persons, you see things going up and you hear everyone talking about it. You say, okay, I'm missing this, I need to get into it. And I always tell persons when they ask me about these things, right? I'll go on the internet, I'll do a quick search and see what the website has, who it's regulated by. Because you want to know, in the event something goes wrong, where do you go?
Yeah.
Right? Who do you report this company to? If this company is just online or based somewhere in Europe, when it's you can't get your funds back from them. Now you're going to fly to Europe to go.
Exactly.
You invest $1,000, a ticket to Europe is $1,000 or more, right? So you can't really get your money. And what you find is a lot of these things, it's easy to have some sort of computer software that says your account went from $100 to $200. When it's time to withdraw your money,
It's not there.
it's impossible to get, right? They ask you for all kind of different requirements. They need a copy of your passport, they need your bank card, all kind of, funny things. And that's where a lot of people realize, okay, it's too late. And then they come to us and say, oh, I put money into this, how do I get this money out, right? So, there's no need to be first. Ask around. If 50 people have said, oh, I've invested in this before, I've got my money back, then maybe you take a chance. But if you're the only one that knows about this, you go to investment professionals, they've never heard of it. And sometimes people get the sense that because we work at traditional institutions, we don't want them to do other things,
Right.
which is not the case. So I never tell no one, no, don't do it. I just said, okay, think about this and consider this before you do it. And at that stage, you're on your own. If you go and do it, then you live with the consequences of it.
So one question here is, how do you measure then the success of your investments beyond just your financial returns? How do you hold value in it beyond just what you get, or can you?
Yeah, well, I think when you start investing with some goal, right? Either it's short term, I want to save for the down payment for a home, or I want to save to purchase a car. And, if you save enough to get that car, then that was successful, right? And long term, you set your goals. You say, okay, I want to purchase a home, I want to put kids through school or college, I want to have a decent retirement, I want to be able to travel. And so, if you're able to achieve those things, and I think that's, the measure of success outside of just saying, okay, I earn 7% per year, right? It's achieving your goals that you started out with.
Yeah.
I would say this though, right? I'm going to take a different tack. As you get older, you see things differently. Success, the traditional is you have how much money in the bank. I think today, success is having peace of mind, having good health, then having money in the bank.
Yeah.
Without peace of mind or good health, it's difficult to achieve all of the stuff that we've been discussing this morning.
Yeah.
Again, which goes back then to the point. To have peace of mind, you need to invest according to where you are at in life. So you need to be mindful of the risks that you're taking. So you're not worrying about it, that cause further sickness. And so it's important that you really speak to a professional, whether it's here at CFAL or any of the other investment houses, but I think it's important. Yeah, I mean, like I said, we're not afraid of competition. So we know when you've checked to us, you would invest with the best.
Exactly.
And so we're not worried about that. But I think having that peace of mind, good health, that's for me the definition of success.
Yeah.
And then it begins, once you have that mindset, then you could structure your investment portfolio to make sure that you continue to have that peace of mind and you can provide for your future.
Yeah, it's like they always say money doesn't buy happiness, and it does though. When you have money, you're quite
a few things.
You're quite settled. You're not worried about much.
There are a lot of unhappy, wealthy people.
Well, they're doing it wrong. I have a question here. It's very specific. It says, we're over 50 and we're raising 3 young kids in high and senior years. We're considering cashing in our 20 plus years of life insurance to put it into a pension and college bond fund. Would this be a wise investment strategy, or should they continue going with their life insurance?
I think it's difficult to just answer that because we would have to understand what is the cash surrender value. Then we'll have to look at, if we were to invest those cash surrender value today, what time horizon are they looking at for those 3 kids? And then we have to look at, is there a substantial mortgage in the house such that if something happened to one of them and they pass away, do we have sufficient money to at least pay the mortgage off so the kids at least have something? So again, this is why we say investing is very personal.
It's very
and you really have to sit down with the person and really understand all of the issues in its totality before you could make any sort of sensible recommendations.
Yeah, so I recommend this. It was an anonymous person. Please give us a call at CFAL or email us at info@cfal.com and ask to speak with one of our financial advisors who will be happy to help you along that. I wanted to talk a little bit, going back to the national development side of things, the importance of being informed on economic trends and policies, especially here in the Bahamas, keeping up to date on what's happening in the news and in the region so that you can understand the importance of investing and how you want to invest. Can you just speak to that and the importance of educating yourself on these financial matters?
Well, I think it's good to be aware and updated on everything. I think a challenge for some people is, how frequent do you want to be monitoring investments, right? So for us who work inside finance and the industry, we tend to read the news every day, right? And you would find that the news is not always the most positive or the most exciting things, right? And so we have to kind of weed through a lot of negative information and also have to ignore a lot of information, right? Not everything that's out there is useful information. So if you follow everything in the news, you will never invest. Right? There's always someone saying a recession is coming. There's always someone saying a downturn is coming and the economy is just going to fall off a cliff, right? But as mentioned, there are cycles. It goes down and it goes up. And you just want to make sure that you invest appropriately to, achieve your goals. But, I'm not sure I suggest to someone to every day, if you have an investment in a company, read that company's news every day, right? Because it's a lot of up and down volatility. And, if you say I'm investing in this for 5 years, perhaps every month, every 2 months, you check in and see how it's doing. Make sure the reason you invested in it hasn't changed rather than this because if you follow it every day, it's going to drive you crazy. The market literally goes up and down every single day. So.
But if you're seeing all of the negative, you talk about recessions, right? There are different sectors of the market that generally perform better during a recessionary period. So for instance, right, let's take the energy sector again, right? If I recall correctly, during the pandemic, everyone still needed electricity.
Yeah.
They still needed water, right? So there's some investments, when they present themselves in a particular sector that's required for use in your daily lives, you want to have, a good portion of your portfolio, if it's priced right, in that investment, right? Now, when you're talking about, some of the other, like AI-driven stuff, those things go with the time and they go up and down. But but the last time I checked, interest-sensitive tend to be usually perform better in recessionary slow time periods. But again, the reality is in the Bahamas, we don't have access to a lot of these investments. And so again, hopefully, the central bank will continue to relax exchange control that will afford us the opportunity to take advantage of some of those opportunities. Bearing in mind, if you don't know what you're doing, you would lose it just as fast.
Yeah, so you have to really take advantage of the guidance that we offer here at CFAL. We're nearing the 1 hour mark, and so I wanted to get to some of these questions. I'll try to put all of them together, but some of them are around why is it that many investment firms, the interest returns locally are so much lower than the firms or what's offered in the United States. You said on average, you'll see about 8 to 10%. But I want to note that CFAL has a suite of mutual funds that have varying returns, interest rate returns. You want to talk to that, Angelo?
Yeah, and I'll give a good example, right? We have what's called the CFAL Global Equity Fund, right? And, prior to COVID, I think the year right before COVID, the fund probably went up 15%, right?
Yeah.
And everyone said, oh, this is good, and they jumped into it, and then the next year COVID came, and the fund went down 20%, right? So it's kind of that give and take when you take risk, right? But again, too, if you look at the U.S., the U.S. is the largest financial market in the world. Every country invests money into the U.S. stock market, so we would never really be able to compete on the same level. But I will say there's the Bahamas International Stock Exchange, BISX, which has about 20 companies on it, and some of them do just as well, right? Some of them do 7, 8, 9% per year. So you can also invest in those if you want directly or via a mutual fund. But again, just as it can go up 8%, it can go down 8%. And we always kind of make sure persons are aware of that, because again, fear of missing out. When you see the market going up, it's like, oh, I need to get in. And then when it goes down, you're like, oh, I need to get out, so.
And to date, year to date, our funds have been performing very well. And I think last year, it was the global equity that got 12%.
Correct.
Yeah, so there is a vast range of what you can expose yourself to with CFAL's products. I'm not sure with...
The only thing I'll add to button that up, you have to then compare apples with apples. So if you looked at interest rate in the U.S. for the last 10 years, it was very low. So you were only getting half of 1% on your deposits, while you bought government bonds here in the Bahamas and you could get 5.5%, 6%, right? In recent time, because of inflation expectation, et cetera, rates in the U.S. went up. So now on your 3-month or 6-month treasury bill, you're getting 5.40, which is equivalent of about 30 years. So let's just compare apples with apples in terms of when we try to bifurcate the investment landscape in terms of returns.
We have another one. They're asking if we have investment portfolios for children. We do. We have college savings plan. And you can also, I believe you can open wealth accounts for children, correct?
You can do accounts in trust for kids, and at 18 they would be able to register it directly in their name if that's your wish. But yeah, like you mentioned, there's the college savings plan that you can invest in as frequently as you want for kids for college education.
Okay. And do you anticipate investment houses like CFAL evolving into more exotic investment strategies in the future, locally or internationally? I know, Anthony, you pride yourself on our innovation here and the types of investments CFAL makes in particular, right?
Well, I mean, look, this is where, again, the notion that we invest in what's reasonably expected to return what our objectives are, right? So in terms of what you call it, novelty?
Exotic.
Right? What is exotic in the investment world? Derivatives have been around for many, many years. I mean, if you're calling crypto exotic, then that's fine, right? But again, if I recall, crypto lost nearly 100% from its high way back, and then when we had the FTX disaster, now it's back up. But if you look at the technicals of crypto, I think it's going to come off in a bit. I could look at the flip side. If you were in the gold market for the last 3 to 4 years, your average return has been around 18%. So again, exotic is something that I don't quite understand what the person is asking. But what we look at is the landscape of investment opportunities, and we would invest according to what the investment objective is of the underlying mutual fund. If an individual came in here and say, hey, I want this investment profile, we could structure something to meet that, right?
Yeah.
But again, it's a function of individuals. So when you're investing in a fund, you're not looking at one person. You're looking at the totality of all of those persons who entrusted their investments with you. But again, we invest mutual funds according to investment objectives of the fund offering memorandum or document.
I'm sure to get as many questions in before we have to close out. What impact does foreign direct investment have on national development, and how can local investors compete with these international investors who come in with their fancy coats?
Well, I don't know. Government after government, once you have a white coat with a big suitcase, you can go to the investment authority and get as much land or concessions as you can. I think this is the challenge, right? Foreign direct investment is good, but we need to focus on local direct investment and to get support for local investors wishing to participate and not make their lives miserable in terms of having to go through the regulatory process to get whatever necessary licenses to perform, right?
Yeah.
And at the end of the day, local direct investment is extremely important to the future growth of this country and the gross domestic product.
And I would just add, I think the government itself should push, and I think the cruise port is an example of it, right? Where you have a foreign group that partnered and was forced to allow Bahamians to invest in it as well. So all of these new, foreign direct investment projects, the government should, as much as possible, force them to allow Bahamians to invest in them as well, right? So, as I mentioned, the cruise port, if you've seen the Royal Beach Club, they've always said they're going to provide some sort of opportunity. And I think these will even enhance the appetite for investments, because once persons invest in one of these, you find that they become repeat customers, right? And they start saving and investing more. And they always call back, oh, is there any more? Can I buy more? Can I do more? So the more of these opportunities that the government can foster by forcing these foreign projects to allow Bahamians to invest, because the money is there, I think the better off we'll be. And it also allows some of the money to stay here, right? So with every dollar the port makes, 49% of it, well, 51 would go to Bahamians rather than just flowing back out of the country. And I think that's one thing we have to do, especially if we're going to continue to just focus on tourism as heavily as we do.
Well, we have so many questions, and I'm sorry we can't get to all of them, because we're going to wrap up and hear final words from my two very wonderful guests, panelists today. Just in closing, your final bit of advice to young investors or those who are they have their feet wet and they want to really refine what it is that they're doing. What's their final bit of advice that you have for them?
I guess I would say, I believe you start saving as quickly as you can. There in the Bahamas, the opportunities for, for example, like I mentioned with the cruise port, they don't come up every day, but you want to have fun saving and invested, growing until those come up, so you can take advantage of them when they do come. So we offer a suite of everyday products that persons can invest in. And again, there's others out there as well that you can consider. But the idea is to start saving as quickly as you can, build up some reserves, so as these opportunities come up, you can take advantage of them and continue to improve your own financial situation.
Final thoughts?
Well, again, I'll try to take a more philosophical spin. Don't leave anything for later. Later, the coffee gets old. Later, you get old. Later, you lose interest. Later, the opportunity is not there. You have to do it today, as Angelo say, and you have to do it now because life moves on. And so, as time slips away, you don't get time back. And so, I think it's important that we don't live in regret, and we begin to save today, and don't wait until tomorrow.
Well, thank you so much. This has been really a very enlightening and fun conversation. I enjoyed speaking with you guys, and I'm so thankful that you guys tuned in out there. Just so that you know, this will be posted to our YouTube page. That's CFAL Analytics on YouTube.com. You can type that in to the search and you will find us there. And also, whatever questions that weren't answered in today's chat, if you would like to get more information on how CFAL can help you to achieve your financial goals, or the suite of products that we offer for you to begin investing, email us at info@cfal.com. Once again, I'm Paige McCartney. Thanks so much for being here with us today. Until the next time.